Felix here. What the heck happened today? It was the worst day for the S&P since April. The US got downgraded. The Treasury is issuing debt like never before. The jobs data was a shocker. I'm going to tell you in this video what matters and also what to watch out for so that you know what's happening tomorrow. There's some key things happening tomorrow. Okay, let's run through this. Worst day for the S&P 500 since April. Yes, absolutely. Why? Well, let's get into it. The downgrade was a kickoff. Last night, Fitch came out, downgraded, and took away the AAA rating for the US. That's never good. Makes debt more expensive. It pushes up the yields for bonds, and therefore it makes stocks less appealing. At the same time, the US Treasury is issuing more debt faster than at any time in US history this month. Absolute insanity. Jobs data, well, 50% more jobs than expected on the ADP data this morning. Again, what does that say? It says inflation might stick around, the Fed might do more hikes. None of that's good news for stocks. The VIX, well, before we get into the real detail here, make sure if you want to really understand how the market works and how we can make money. Like we made 22% this month, last month, and we made 55% or something like that for the year. What you can do is join my free trading, this one here, felixfranz.org/webinar, and I give away my entire trading strategy. I give away everything, and we trade live together. It's next Tuesday. You're going to grab one of the seats, felixfranz.org/webinar. Right. Moving swiftly on. The VIX, the fear index, is up the most in 5 months. Good news for us options traders, bad news pretty much for everybody else. The dollar is up. Why? Well, interest rates might go higher. And generally, when people freak out in the world, they buy dollar. They can't really help themselves. Well, plus, given how much debt the US is issuing, somebody's going to buy it. It might be some foreigners, and they're going to buy the dollar for it, right? So at the same time, yields are going up because, well, the US got downgraded, right? So therefore, they have to pay more for debt. And also, this yield curve is steepening significantly. The last 50 years, we've had a significant steepening like we're seeing today. Every single time stock markets tanked. Every single time, 50 years in a row. So what do you make of that? You want to hit the subscribe button just to make yourself feel better? Maybe. Well, let's look at earnings, because that was the other thing today. Okay, we got CVS in, good numbers. AMD, pretty good numbers. I felt it was a little lackluster. My impression was, and I might be wrong on this, that they're sort of doing all right because NVIDIA can't deliver what people want in terms of numbers, in terms of quantity. And therefore, AMD is getting scraps. But maybe I'm wrong on that. Pinterest came out and said, look, we're going to be in line. We're not going to beat like our competitors. That's a bit of a disappointment. And then Starbucks, less sales and higher profits. How do you do that? Well, you increase prices and you upsell people. So basically, the business is not doing as well, but people are so addicted to their coffee and they're so caffeine coffee. Can't get the words out tonight. So they're going to pay more. I don't know. I don't love it. So what's happening tomorrow then? Well, we get China services PMI. You might be okay, I don't care about China. Well, you do because it affects global demand and manufacturing is pretty dire. If services is as dire, then also Chinese stocks might get another kicker here. We also get jobless claims out tomorrow. So that's kind of the icing on top of the ADP jobs data today. If that also comes in really, really strong, as in less jobless people about, then that'll be again a kicker down for stocks because we're still in the cycle where bad news is potentially good news for stocks. And there you go. Unemployment data on Friday too, by the way. So put that in your diary too. So it's going to be a pretty tumultuous week. And I think you just have to think about last time we got a downgrade. It's 2011. And the S&P fell 11%. So yeah, stuff's down a couple of percentage points today. Not good. But the cycle, the momentum can turn like this. And unless you get really good news, it just keeps going down and down and down and down and down. I don't think it's like the end of the bull run completely. I think we're still going to, stick around here for a bit. But I think this is potentially the momentum kicker. We said something's going to break, or a downgrade is something breaking, right? So watch out. Now, what I encourage you to do is, I put out a video today where I walk you through 8 stocks, 4 you'll be familiar with, 4 you probably won't be. and why I think it may or may not be a good time to buy these, invest in these, and how to trade these as well. check it out. I'll put the link up here on the screen. And look, don't panic. I also run you through in that video how you can hedge for free. Literally, you can remove risk from your portfolio for free. So watch the video, check it out, and thank you very much for watching. Thanks for tuning in.